Here's something your insurance company hopes you never figure out. The longer you stay with them, the more they charge you. New customers get the best rates. Loyal customers pay a premium penalty for staying. And most people never switch. That is the business model. This video exposes 5 ways insurance companies make money off you right now and exactly how to stop every single one of them. Number 1, the loyalty penalty. Insurance companies call it price optimization. You call it loyalty, they call it profit. Here's how it works. When you first sign up, you get a competitive rate. It has to be good enough to get you to switch from your previous insurer. But once you are in, the math changes. Every year at renewal, your rate goes up. A few percent here, a few percent there. They know that most customers will not bother shopping for a new insurer. The switching hassle is real. The comparison process is time-consuming. So they bank on your inertia and raise your rates slowly enough that you do not notice. A study by the Consumer Federation of America found that loyal auto insurance customers pay up to 47% more than new customers for the same coverage. 47%. If your auto insurance is $2,000 per year, that is almost $1,000 you are leaving on the table every single year for the privilege of staying with the same company. The fix: get competing quotes every 2 years without exception. Spend 30 minutes. Call 2 competitors. In most cases, you either find a lower rate and switch, or your current company matches it when you threaten to leave. Either way, you win. Number 2, the underinsurance trap. Insurance companies set your coverage limits at sign up and almost never proactively adjust them. They do not call you and say, hey, construction costs have gone up 30% since you bought your home insurance. Your dwelling coverage is now $40,000 too low. That call does not happen because underinsuring you costs them nothing. It saves them money when you file a claim. If your home burns down and your coverage limit is $50,000 below rebuild cost, you pay that $50,000 yourself. The insurance company pays only up to your limit. They got your premiums for years. You bear the shortfall risk alone. The fix: review your home dwelling coverage every year. Call your agent. Ask them to run a rebuild cost estimate. In most cases, the adjustment costs a few extra dollars per month, but protects you from a catastrophic gap when you actually need the insurance. Number 3, the claim denial playbook. Insurance companies have entire departments dedicated to finding reasons to pay you less than you deserve on a claim. This is not conspiracy theory. It is documented business practice with its own industry terminology. Adjusters are trained to look for policy exclusions, documentation gaps, and statement inconsistencies that can reduce or eliminate a payout. The first offer on a claim is almost never the best offer. Studies show that policyholders who accept the first settlement offer receive on average 30 to 40% less than those who negotiate. The fix: never accept the first settlement offer without review. Get independent repair estimates. Hire a public adjuster for claims over $10,000. They work for you, not the insurance company, and typically recover enough additional compensation to more than cover their fee. Number 4, the inflation gap. Everything costs more. Construction materials, labor, medical procedures, vehicle parts. Inflation is relentless, but your insurance coverage limits stay flat unless you specifically request an increase. Your home was insured for $300,000 in 2019. It would cost $420,000 to rebuild today. Construction costs increased 40% in 5 years. Your coverage did not. Your policy has not changed. The gap is real and growing every year. For auto insurance, if you have a loan on a vehicle worth $35,000 and you chose a policy limit of $25,000 years ago, you are now underinsured for the gap between your loan balance and your coverage limit. The fix: set a calendar reminder every policy renewal to call your agent and ask one question. Are my coverage limits still adequate given current costs? That one question saves you from the inflation trap. Number 5, The bundling blind spot. Insurance companies push bundling hard because it is profitable for them. Get your auto and home together. Get a multi-policy discount. What they do not tell you is that bundled rates are sometimes not the best rates available individually from competitors. The bundling discount is real. But so is the possibility that you could buy auto insurance from one company and home from another for less total cost than the bundled price. The fix: get a bundled quote from your current insurer and compare it against separate quotes from different companies for each policy. Do the actual math. Sometimes bundling wins. Sometimes it does not. How to fight back. Step 1. Pull out your current insurance declarations pages right now. Write down every coverage limit and every annual premium. Step 2. Go to a comparison site or call 2 competing insurance companies. Give them your current coverage limits and get quotes for identical coverage. Step 3. If the competing quote is lower, call your current insurer and tell them you have a competing offer. Ask them to match it. In most cases, they will match or beat it rather than lose your business. Step 4. Do this every 2 years. Set the reminder now. Schedule it for your next renewal date. The insurance industry makes billions of dollars every year from people who pay too much, own too little coverage, and never shop around. You now know exactly how it works. Use that knowledge. If you want to compare rates right now, the link in the description connects you to a comparison tool. Takes 5 minutes. Could save you hundreds this year alone. Link is below.